What is the biggest asset for most folks? If you guess their home, you are correct. If the home tops the list of assets, what strategies are out there to leverage this asset for a better retirement outlook? In today's video, I'm going to give you a brief history of the reverse mortgage. I'm also going to share with you some quotes and video clips of Dave Ramsey on this subject. I will also highlight some of the newer strategies that are being used to create more income in retirement. Welcome back to the Financial Fast Lane. My name is Lane Martinsen. The first reverse mortgage was established back in 1961. It was set up by an S&L, Savings and Loan. You remember those? Back then, there was no government backing for reverse mortgages. But then in 1988, President Ronald Reagan signed into law the Housing and Community Development Act. This act laid the groundwork for the Home Equity Conversion Mortgage, or the HECM program, here in the United States. So this enabled the FHA, the Federal Housing Administration, to start insuring reverse mortgages. Basically, this provided a way for homeowners age 62 and up to convert some of their home equity into cash. And they could do this without the need of selling their home and without the requirement of making mortgage payments. The whole goal of introducing this program was to boost the financial security for seniors, enabling them to access wealth that they had built up in their homes over the years. But the program had some problems. There was a high percentage of folks that were losing their homes. As David Ramsey points out, 14% of them were going into default.
Well, let me help you with this, folks. Okay, let me walk you through some numbers. There's 636,000 of these loans out there. 90,000 of them are in default, headed to foreclosure. That's 14% of the loans are failing. That's astra-freaking-nomical. Unbelievable 14% failure rate.
So how could this have happened? A 14% default rate is very high. That means there was a lot of people that were in reverse mortgages that were losing their homes. How could this be when there is no mortgage payment required? It's because there are some things required with a reverse mortgage loan. Very specifically, taxes, property taxes, and insurance. And so the mistake that was made was that folks were being, told or assuming that if they did a reverse mortgage, they would have no payments of any kind. Well, it's true that they have no mortgage payments, but the terms of the loan are that you will pay for property taxes and you will keep the home insured. So you have to have homeowners insurance, you have to pay the property taxes. And so these people that were losing their home, and you hear these terrible, sad stories of people that lost their home because they were in a reverse mortgage. It's because they defaulted on the loan. Well, what are the terms they're defaulting on? They stopped making payment on their taxes or their homeowner's insurance. And so that is where things went off the rails. The Reverse Mortgage Stabilization Act of 2013 was signed into law as a direct result or a direct response to the high default rates. And so the new law now requires a better upfront assessment of a borrower's ability to meet future tax and insurance obligations, aiming to keep the homeowners from defaulting on their loans. And so many people, I guess you could say, were put into reverse mortgages that really never should have been put into reverse mortgages. Because if you do not have the ability to pay property taxes and the ability to keep it insured and to maintain that home, you shouldn't have any kind of you really can't afford the house, right? Whether you have a mortgage or no mortgage, you still have to pay property taxes, unfortunately, right? And you're always going to want to have insurance on it to protect the asset. And so if you can't afford even that, then reverse mortgage is not going to be for you or for those people that had them. Now, many people have been scared away from reverse mortgages from people like Dave Ramsey. Now, let me just say something about Dave Ramsey. There are so many things that I align with him on. I think he's done a tremendous service to so many people in America, especially, where helping them get out of debt. There's some really important things he's done, and I align with him. And his Christian values, I align with him on those. But there are certain things, he's a celebrity with a very large megaphone. And when he passionately says things that just aren't accurate, I have to speak out, because there are many people who can really benefit from the right strategy. So let me give you an analogy of kitchen knives. Okay, when you think of a kitchen knife, it's a very useful tool, right? If you're going to make a salad, you've got a head of lettuce, you've got some tomatoes, you've got some cucumbers, and you want to slice them and chop up the salad. A knife is a very useful tool in doing that. But at the same time, a kitchen knife misused, it's very, very dangerous, right? You can lose digits or, cause great harm. And in fact, knives, including kitchen knives, have been used as a weapon to kill and to harm. And so, because kitchen knives are dangerous, do we say under 100% of the time, don't use kitchen knives? Don't have them. They're dangerous. I can prove it. I can show you the blood. It's true. Kitchen knives are dangerous. But when you use them as intended, you use them responsibly, they are very helpful and really irreplaceable, because they can do things that nothing else can do. And so we have to be, I think, careful with how we just categorize things into one big label as that's good or that's bad, because almost nothing is all good and all bad.
100% of the time, I've told people to not do reverse mortgages.
Right? There's pros and cons to everything. I think of, a reverse mortgage is a financial tool. And there are many financial tools of all sorts, right? They have different tax implications. They help you reach different goals. There's ways for money to grow. There's ways for money to create income. There are so many different types of financial tools, and a reverse mortgage is one of those. Right? It's a financial tool. Can you cause harm with a reverse mortgage? Yeah, you can. Almost any financial tool can be harmful. The way you invest, if it's inappropriate, with too much risk based on your certain situation that you're in, your time horizon, just an investment in a stock can be very dangerous and even devastating, right? Because it wasn't done appropriately. It wasn't done with really good planning involved in a responsible way to manage the risk, right? So I would say don't be afraid of reverse mortgages. You just want to understand them, and you want to know what the benefits are. So why would I promote reverse mortgages? There must be some financial incentive that I have, right? That's what a lot of people will think. They'll think, well, the only reason you'd encourage this is because you have a financial incentive. Well, that's not the case, right? I'm a financial planner. I have zero financial gain from recommending a reverse mortgage. But I'm a holistic planner. We have to look at the whole thing. We have to look at all the tools in the toolbox. And if our goal is to increase our income in retirement, to have stability in retirement, we can't ignore the largest asset. And the HECM reverse mortgage is such that for some people, certainly not everybody, but for some people, it's going to make a tremendous difference. And it's not the people who are destitute and can't afford anything, right? You have to be able to demonstrate your ability to pay taxes and to pay insurance. My incentive is to help people. There are a lot of people who can benefit tremendously, okay? Now, in my book, chapter 9, I go into the details of some of these strategies. So let me just kind of touch on them briefly here. Make your monthly mortgage payment optional rather than required. Now, so this would apply to people who pretty much everything is good for retirement, except they've got this mortgage payment still, and it's just not quite enough to cover everything. And so, what if you have the option to make the mortgage payment optional? You don't have to make it. You can make it if you want. You can skip months, or you can just skip all the months, right? And so that can be a complete game changer for people who were, close. We think we can retire, but then you get rid of their mortgage payment. It's like, woo, now they've got a lot of wiggle room. Okay, that's one. Establish a permanent guaranteed line of credit. So let's say your house is paid off. Why would you even consider reverse mortgage? Well, to tap into the equity. So you can establish a line of credit, non-recourse loan, guaranteed, backed by the federal government. And that line of credit is guaranteed to grow at whatever the interest rate is on the loan. So let's just assume a 5% rate. Every year, your line of credit grows by 5%. And if you choose to tap into it, and there's lots of ways to tap into it, it's not considered income, and so it's tax-free. So now you have a tax-free source of income. Okay. Another strategy is to use the tax-free funds to be used for Roth conversions. Okay. So now, and we've had clients where they have a large amount of money in a tax-deferred account. So, by the way, if your home or the home is the largest asset for most people in America, the second largest asset is the 401k or retirement accounts. And so if you've done a good job and you have a sizable 401k or IRA, it's all yet to be tax dollars. There's a whole bunch of tax inefficiencies and future taxes that you're going to be paying. And so a lot of people would like to be proactive and reduce the taxes, pay taxes at the lower tax brackets, lower their RMDs. Well, the reverse mortgage might be a way to do that, where you can do the conversions, you pay taxes from the line of credit, and you can get yourself into a really tax-efficient position going forward, with most of your money or the right balance being in Roth. A lot of times people, that's the thing that gets them there. It's going to be very unique, right, for each person. But another one is health insurance. Let's say we have a situation where you want to retire, let's say at 62, but Medicare doesn't kick in until 65. And so you have this, some years here with an expensive private insurance policy. And that can be a deterrent for people that would retire. They're ready to retire, except for that health insurance problem that kind of keeps them working a few years longer when they otherwise would retire. Again, the reverse mortgage might be a solution that bridges that gap. Another one, a big one, is to maximize Social Security benefits. So if you want to retire, say, at 62, but you really need your Social Security benefits to be maximized, then what if we have 8 years of a plan on a reverse mortgage where you have sufficient income? It's easy for you to defer on Social Security all the way till 70. You get to 70, your benefit is probably double. Right? It's guaranteed to be 77% larger than if you were to claim at 62. And with COLAs and the compounding, it's typically going to be over 100%. So double your Social Security benefit by using a reverse mortgage strategy for 8 years. I mean, the amount of additional income that you can receive in retirement is significant. We're talking hundreds of thousands of dollars. Another strategy is using a HEC reverse mortgage line of credit as a volatility buffer. So this is to protect you against sequence of returns risk, which can be devastating in retirement. But if you've got a plan and you know how to use it, again, significant amount of additional income or protection because you had a strategy and you tapped into that asset. There really are so many different strategies. It can be used to help with a long-term care plan. to help care for a spouse. It can be used to maybe put in an apartment, convert a room for a seat for an aging parent, or to create some additional dwelling unit that creates income or rental income for you. There are so many different ways to use it, and the end result, what's the outcome? Reverse mortgage critics like Dave Ramsey one of the things he'll point out are the fees, and that the fees are high. Well, I would say in compared to what? So if you have a real myopic view and you're looking very narrowly, yeah, they're going to cost more than a traditional mortgage because there's an insurance component, right? It's the federal insurance backing. There is a cost to that. But what is the outcome? Something is expensive only when you're not getting the value, right? But what if you're able to have better outcomes, better lifestyle, higher incomes, because you have a good plan, a well thought out plan? I'm not saying it's simple, and I'm not saying everyone should have a reverse mortgage, but I am saying it's a financial tool. It's a powerful financial tool. And for millions of Americans, it can be an absolute game changer. It can give them way more peace of mind. You have to understand the terms of the loan, right? You got to be able to pay the taxes. You got to pay homeowners insurance. You need to be able to maintain the home. You have to live in the home. It has to be your primary residence. You have to be over age 62. Yeah, there are some rules. So as long as the rules make sense in your situation, it can be powerful and beneficial. So I encourage you to learn more. And if you're maybe interested in my book, you can just go to 5wbook.com and learn more about that. And I say it all the time, a good plan, a comprehensive, holistic plan, it will result in more income in retirement. It will result in greater tax efficiencies. It will result in less risk, less sequence risk, for sure. So there are things you can do to improve a long-term retirement plan, and it's called having a really good plan and having all the tools in the toolbox. So hope you like this video. If you do, or you have comments, please share. I'd love to hear your comments. And I look forward to seeing you in the next episode of the Financial Fast Lane.